All right, hey traders, TG Watkins here. Let's see if we got everything up and running. And yeah, we got broadcasting in a few different places, so looks like we are good. All right, now just a little bit of housekeeping. I wanted everybody to know that I've got a market update webinar tomorrow. It's free. You can come over here to profitpilot.com, click on services right here. This is one place to go. Or if you guys already know about the free trading room, that's where we're going to be hosting it. So again, it'll be tomorrow, 3:15 Central. So just come over right after the market closes. And honestly, this is going to be talking about what's going on with this bear market. I've been putting together a lot of charts, a lot of news, a lot of tweets, a lot of data. And so we've got a lot of stuff and a lot of historical precedents to be talking about. So I think it'll be pretty informative. That's what I've been working on the last few days. So hopefully you guys tune in, just kind of check up and see how the market's going. Of course, we know that we we just hit a 20% correction. A few months ago, I gave another market update, and at the time when the market was starting to roll over, I was looking for a 20% correction. Well, we got that, but this is not a bounce in an uptrend. This is definitely not that. This is not what I projected. I was like going back. I said, hey, look, this looks like 1998. We get a dip to 20%, then we bounce. We get one more year, and then we roll over. Nope, that is not what's happening underneath the surface, as we know for most things. It's really just melting down out there. So this is a 20% correction in what seems to be a bear market. So I'm going to show you, as I said, some history. Going to go back at longer term charts, monthly, weekly, all the way back into like 1929 to show you some stuff from back there. So yeah, tune in. Should be a good time. My mic keeps dropping. All right, let's get that locked in. All right, so let's see. Yeah, thanks guys. Looks like I'm all tuned in, ready to go. So let's get into the S&P and kind of see what's happening in through here. Now, my contention, and I've been talking to the Moxie traders, is I said, hey, I think we're going to be hammering out a bottom. Remember, 20% move down kind of is where everybody starts to buy, or at least turns off their shorts as far as the market goes. So 20% correction, 20% down was not only a target, it was a magnet, but then also probably a place to see things bounce. The interesting thing is that for a long time, for a few weeks, I had been calling for SPY 380. Excuse me, first time I've had to talk in the morning. All right, so I was looking at SPY 380. And what was interesting is last week we got to SPY 385 and we got this bounce. So that kind of threw me off a little bit. I was like, well, I guess that's close enough. And I suppose that's where the market wanted to go. And, let's bounce there. Well, then, of course, it does an undercut. So an undercut rally. This is why I talk about, when I talk about the elf shoe, I talk about that as a kind of a relationship to price and kind of this idea. I don't usually refer to double bottom, because double bottom is actually quite a misnomer, because this is a bear trap. Got a lot of bears short right in through there, and then turned around on them. And that's why that sometimes, and there's such thing as an undercut and rally, and that's why the idea of a double bottom is not always accurate, because, well, that did go lower. It did break the previous low, and then it turned right around. So, it's kind of the idea of what's going on with that. We were watching, I was talking about this with our positive divergence right there on the hourly chart, and then again, price down, but the Moxie indicator up. This is the stuff that I've been talking about. I've been looking for it. Again, 20% correction on the market's like, how much further does the market actually want to go down? And I thought, well, probably not much. And then yesterday, the internals were pretty darn negative yesterday. And the market did move down. Like I was looking at this again, talking to the Moxie traders, 50, 200, 50. I mean, just like clockwork on the 15-minute time frame, which was interesting compared to, say, this 50, 200, 50. You guys see the difference? How one of them flagged into the 50 and how the other one pulled back down into the 50. So this is one of those things where you just can never quite know which way it's going to go, but you have an idea of what to expect. And that way, when it unfolds, it makes sense, because you're like, oh, okay, I knew the idea of what was going to be happening. This turned out to be a trampoline move, and that is when price is below the 50, but the Moxie indicator is above 0. This is how the Moxie indicator is a pretty good tool for some of this stuff. It's a momentum based indicator. And what it was telling us yesterday is that even though price was down, momentum on the 15-minute time frame was actually positive because it was over zero. And I was made at least 3 posts on this yesterday, communicating to the Moxie traders like, hey, this is kind of what I'm seeing. Yes, price went down a lot. Yeah, it's pretty rough out there. And the internals were all negative, but look, price kind of climbed itself back, and the Moxie indicator on the 15-minute time frame was staying above zero. Potential trampoline move. And then I was also saying that the hourly Moxie indicator was almost at zero and probably was going to go positive yesterday. And sure enough, it did. So we got our Moxie price trigger that tells me that momentum on the hourly time frame is now positive. So that's something to note. And then near term, looks like a inverted head and shoulders right there. Now we've had a couple of these that didn't really work out. Like this was the last one. There was an inverted head and shoulders, worked for a little bit, then came back down. So nothing is ever perfect in the stock market, and one thing can be right for a little while but then wrong later, and that's kind of the name of the game when it comes to all of this. That being said, we could see that the market was generally getting oversold because it kept following the lower 30 ATR, and at some point they're going to throw in the towel and be like, all right, I've had it. And then buyers will come back in, sellers will shut off, and we'll just kind of start seeing a move back up to the upside. Now, the thing that I've been talking about over the last, I guess, couple weeks, maybe a few days, is what kind of move up will this be like? And we don't know. That is the challenging part. Let me see if I got, yeah. So this is 2008 on the left, and this is now 2022 on the right. And I'm seeing a lot of similarities here. I'm going to go into further detail in the webinar tomorrow because I got it all laid out and stuff. But the one thing that I'm wondering is what if we kind of get this? And that is a very lazy bear flag up into the underside of a downtrending daily 50. What if we get that instead of some more energetic move like we had, I think it was March, something like that, to where it was a big short squeeze and there was a lot of energy and it carried for a few days. It's going to take a lot. That takes a lot to do. It takes a lot of shorts having to exit their positions. That takes a lot of buying having to come in. And I'm just kind of putting it out there that maybe we're in a different time because it is summer, and a lot of stuff underneath the surface has been just damaged. And I'm just kind of wondering how much money there's actually out there that can carry things forward. So just got to be careful out there, Anders, yeah, let's see. Take a look at the Nasdaq. It's probably going to be very close, very similar to the S&P. Nasdaq is weaker than the S&P, but it does tend to move more. So that is why I picked it one time to see if we can get a little bit more range out of it. But generally speaking, you can see that we have a bit of a double bottom here. Again, the Moxie indicator has been trending up. It's probably going to cross over zero today. And then you could see price down on the 15-minute, but the Moxie indicator up. And then we have a double bottom and again, Moxie indicator up. So there's your divergence, your positive divergence starting to come in right in through there. You can see down, up a little bit, then mostly double bottom, higher low on the Moxie indicator. And now the Moxie indicator is looking nice and tight, which again, Anders, and you've been very active in the chat here. And so I know you're kind of looking at all this stuff, but notice this is one of the things that I teach about with the Moxie indicator. Notice how, what was that? Today's Wednesday, so Monday, that the market was up, but notice that the Moxie indicators were spread from each other. This is something I always teach over and over and over, is that when you see the two indicators spread from each other, it's like two kids in the back of the car. They're not having a good time with each other and they're fighting and they're being mean and all this kind of stuff. And so the parents separated them, right? Yes, they're in the same car. Yes, they're going in the same direction, but they're spread from each other and they're not happy. So they don't really agree with each other. It's not until they hug and make up and they become friends again that the parents let them sit next to each other, and then they become stronger in that direction or that sentiment, whatever direction that is. So this is something that I'm starting to see now, and that is the difference between Monday to today, at least through the lens of the 15-minute Moxie indicator. So going forward, it looks like this should be stronger. And again, I kind of think that selling about now should be subsiding, at least in the indexes. Right. I still think that a lot of things are probably going to continue to just melt down or kind of chop around until they move down. I'll show you a couple of examples. But I do think that there will continue to be weakness in the market, despite the indexes moving up. So that's one kind of thought. And just because I might be targeting the daily 50 does not mean I think that it's necessarily going to go like that. It could just do this until it meets the daily 50. Okay. So just watch the daily 50 is a moving target. And I could be correct in that, yes, price will meet the daily 50, but how will it meet the daily 50? Like, where will it meet the daily 50 and how long will it take? Those are really kind of the questions that we don't quite know. And we're trying to suss out to figure out, okay, well, how energetic or not is this market on the upside? We do have Jerome Powell speaking today with the FOMC, so that's probably going to be a thing. Let's kind of hang on to that. Maybe he's going to be a little bit, talking out of both sides of his mouth as far as saying, like, yes, we're addressing this, and yes, we know inflation, but yeah, we need to raise rates, but we're going to be taking it easy and all that kind of stuff. So it's probably going to be some craziness there. Now, the IWM, the IWM has technically had relative strength, honestly, because while the Nasdaq and the S&P actually undercut its previous low, the IWM made higher lows. So that is something to note. And notice, I actually talked about this, I think last week. It didn't happen for the Nasdaq or the S&P, but it did happen. What I'm going to say did happen on the IWM. Notice, for as much as price was down and then going sideways, notice that every single day the Moxie indicator went higher. That is something to pay attention to. It's telling you that even though price is going down or sideways, internal momentum is starting to build to the upside. So this is something that last Wednesday I talked about this because, well, I think it was last Wednesday the market was moving down quite handily, and I was like, not too worried. I think that the market's really just chopping up, and hammering out a bottom, all that kind of stuff. And I said, yeah, let's kind of watch this. I think we're going to see these continue to stay up and green, and that will mean something. And it did it better on the IWM versus the other ETFs or indices. The other thing to note is that the MOX indicator here on the 15-minute time frame kept having higher lows and kept trending up despite price moving down and then price going sideways. So again, divergences. We're seeing a lot of divergences come in here. And we could just tell, like, the market was just super oversold. Like, how far down is this thing gonna go before it kind of gets a reprieve? Now, again, all of that can be true. Market may not go any lower for the next week or 6 weeks or something like that. But what kind of way does it go up? Is it actually going to be energetic, or is it just going to be kind of a bear flag? Um, I do think the market's going to go lower, much lower in the course of time, but they have to gain altitude before they can go lower. So do keep that in mind that they are not ready to go lower right now. They need to repair themselves and start climbing that elevator before they can take it back down. Okay, sounds. Lauren, I guess you're taking care of the Moxie people about audio, so hopefully that's been fixed. Yeah, so let's take a look at the UVXY since that's kind of the next something. And honestly, not a whole lot to talk about. It's pretty impressive that it has just been staying where it is, but do note that there is a bit of a pennant going on right there. All right. Now, the one thing I would say, based on the hourly time frame, and I'll fully admit this, the UVXY has been starting to get a little bit weird ever since the UVXY basically held in right there, even though the market kept going lower. Told me that whoever, the big players that work with UVXY and the funds and all that stuff, apparently they did what they needed to do in order to hedge for it, and they didn't want to push it higher. And I think what it was is they pretty much knew that the market was going to get pushed down. It was just built in. There wasn't any fear or any panic. It was just a slow, methodical move down lower. And so the UVXY didn't respond with any unknown fear and any panic. I think that is why it got kind of captured in through there. Generally speaking, it seems kind of the same thing here. Yes, there have been moves up and down, up and down, up and down, but they have not trended in any direction. You can see it didn't hold any moving averages on the 15-minute or the hourly. And at this point, the only thing I would probably lean towards, again, I think the market is going to drift upward. So I would be considering this to be an inverse trampoline move on the hourly chart, which should mean that the UVXY should fade. Again, I think this would fade if the market starts to trend up because, well, fear is subsiding, hedging is subsiding. Now, I think maybe the reason why it's kind of staying right here is because of Jerome Powell speaking soon. So that is a thought that it's like, okay, well, we don't know what he's going to say, so let's just kind of keep what's going on, just in case he says something that the market actually does panic about, then let's go up. But for as much as that might be the case, if I look at just the technicals, it really makes me kind of think that the market is just kind of not ready to keep going lower from here. As I said, it's been trying to hammer out a bottom, and I think it's looking for a catalyst, and it might be Jerome Powell. So whatever he says, you know, who knows? Who knows what he's going to say and how the market's going to react? But I would generally think it's going to take whatever he says and just say, okay, we're going to go back up. And so we should see the UVXY move back down. But this thing has become extremely tricky. I mean, it's always been tricky, but even more so tricky. And as I said, kind of inverse trampoline move on that hourly chart. Chris, that's always a fun thing. So how do the indexes go up if there's weakness in the market, aka stocks? So part of that, as far as things being weird, is sometimes you can see the market go up when the internals are negative, and then sometimes you'll see the market go down when the internals are positive. You're like, how does this work? We even talked to some other traders like, yeah, we don't know how this works. Like the internals are saying one way, but the market's moving the other way. So there's not always a 100% certain answer. But as far as like how can the indexes go up if there's weakness in the market? Well, first off, look around the market. The indices themselves, the indexes have gone up. Say the S&P and the Nasdaq were going up all the way up until like what, November, December, and that's because 5, 6, 7 stocks make up the majority of the S&P, for example, and that's why they were able to go up because those stocks are still going up. The small caps, like if you look at the IWM started going sideways mid-February 2021, and that's because all the underneath all of the small caps, all the crazy stuff in 2020 were starting to peel over and go down. And the thing about the IWM, you could actually see underneath the surface, all these stocks were just imploding, but it was still going sideways. So it really comes down to weighting, like WEIGHT. So weighting and how many stocks are keeping the indexes up versus how many are going down, how large they are in those ETFs. And so we can see that underneath the surface, there could be a lot of weakness under there. But if the bigger major stocks continue to kind of drift up, then the indexes will continue moving up. So for example, let me show you this. So look at Apple, for example. Apple's like the largest stock. And yes, it's been pretty torn up. And you can see it pretty much looks like the market, right? Now, if we look here on Apple, we are looking at the last chart. It's weekly. Where is Apple? It's sitting on the weekly third ATR. It's usually an oversold level on whatever time frame we're looking at. You can also see I have a line here, and this line has been here for a couple months. I was saying that I would not be surprised. Go back and look at anything I've said on either here, Facebook, you name it. I said I would not be surprised to see Apple go down to 140, which is the third ATR, and which is this level that you can see here because of that line. And boom, that's exactly where Apple went. So that worked out. So my point is, I think the downside on a lot of these names has been reached. And names like this are probably going to either bounce or bear flag or generally trend upward into the next area of overhead resistance. And so it's names like this that if they're done going down at this area and they gently start to move up like this in however method they want to, then that is going to be what helps pull the market up when even though 50 or 60% of the market underneath might actually be trending down. It's because of how big these names are in the S&P. That's why. And then let me show you over SPY and look at this. Notice how the S&P is also at the weekly third ATR. So we're in some very, very oversold conditions. This is why I've been saying we're probably going to be hammering out a bottom. Look at the stochastic on the weekly. Look at the stochastic on the daily. Look at the Moxie indicator here despite price going down. Okay, so this is why these things should probably be turning. But I think you could still, if you want to, I think you can still find some stocks out there that are probably going to trend down. All right, BYND for short, probably not. Let's see if I get down here. So let's get right, one of these. There we go. Daily. So daily, hourly, 15. First off, this is kind of what I've been saying. People have been asking me about Roku and some other names and whatever. And yes, they keep going down, but for me, they're getting kind of towards the end of what I want to do. First off, remember that I think the market is going to start generally kind of trending, migrating upward. Okay. So we're going to have to find the correct stocks that still want to go down in a market like that. Seems to me there might actually be a double bottom forming here on Beyond. Okay. We're also starting to see some slight positive divergence on the 15. All right. These names are oversold. Like, look, third ATR, third ATR, third ATR. They just get to a level to where they may not really go down much further at this point. So Beyond Meat at this point, I don't think would be the most ideal area to short it. Yes, it might continue to go down later, but I think right now may not be the best place. Yeah, Jamie. So, do I think the summer doldrums have anything to do with the likelihood of a lazy rally? Absolutely. Yes, absolutely. That is why I'm kind of saying, we're in a different era, we're in a different point of time. We already had our sell in May go away. I do think that a lot of people out there are looking at the market. They're like, "This is dog crap, and I don't want to participate. Summer's here. I've already lost money or whatever. I'm down. I might as well ride it out and just see if it comes back a little bit." And then, it's summer. People go out and they do things. They take vacations. They're not around the computer as much. The um, main hedge funds and firms, people like that, they're at the Hamptons. They're doing their stuff, and they left it to the B squad to run everything. And yeah, a lot of people got hit, and there's just not. Think about how much wealth has disappeared over the last few months. Think about all those names. Think about the ARK ETFs. Think about all the other stuff. Apple, Tesla. Tesla has gone down 30 something percent. Like, how far did Tesla go down? Think about how much wealth just from here. It went down 46%. You know, like, that's a lot. That is a lot of stuff to lose. There's just a lot of wealth that has suddenly disappeared. And so, the other thing is, you look at this, and Melvin Capital had to close their doors. I'm sure there are a bunch of other hedge funds and firms that got into some real serious trouble, and they are not positioned to be able to put money back into the market right now. So, yeah, I have a feeling I'm kind of leaning more on a lazy bear flag back up. Now, again, I could be wrong. That's fine. Let's take a bullish position and just see where it goes. But that's kind of what I'm thinking. All right. I mean, it seems like my audio is good on most places, but I'm getting kind of some mixed signals on that. So, if you can't hear me, we've got a recording, so you can get that out at least. But if you can't hear me, you didn't know I said that. All right, let's see. So Anne, would you tell me about or tell you guys about my mentor? Well, I had two of them in particular. One of them was Sue, another one was Derek. Yeah, thanks, brighter side. And she worked for Pimco actually back in the day, and just really knew her stuff. And then she decided to retire, and I don't know. Sometimes she was trading on her own, and then I met her through one of those the things like we do to when we have people come over to Austin for the simpler trading kind of meetup, or even at the Las Vegas Expo, stuff like that. And I don't know. She kind of took me underneath her wing, and she was always available for a phone call, and she just kind of liked that I was really really interested in this stuff, and gave me a place on Google Hangouts or Google, I don't know, Sheets to talk and keep posting stuff, and that's where I was really learning stuff, and that's actually how I began teaching. Is I just kind of kept putting it out there, and the more that I put out there, the more that I was writing stuff and annotating. I was like writing all over my charts and posting it. The more that I could actually see stuff and get that feedback loop. In fact, I was just talking to a couple in Las Vegas when we were at the Traders Expo, and I said, "Hey, one of the best things that helped my trading was actually actually creating Moxie Indicator, the Moxie Trader, which was my own company, and then joining Simpler because I had to teach this stuff all the time. Verbalizing it, writing it, showing it day after day after day really helped connect all those dots. and made that feedback loop of me hearing myself. And then I'd actually watch my own videos. And so I told the couple, I said, maybe what you should do is create your own educational videos and then you go back and watch them because honestly, I do that too. I will watch my old videos that I make because sometimes as I talk, I'm kind of doing my thing. I don't actually see what I need to be seeing. So I'll rewatch it. And it's like I'm teaching myself, even though I'm the one that made the video. So pretty neat. I know it seems weird to be talking to yourself. That's why some people have dogs next to them when they're trading. But I would say if you're struggling a little bit, go make videos and then go rewatch your own videos. It's really, I know it seems weird, but it actually it helps quite a bit. Yeah, stuff like AN, this is my point. I think that they're gonna chop around for a while. I mean, this is a topping pattern. So Georgia, this is definitely a topping pattern, and a lot of these things I want to be a little bit patient with, because if we look at DKS, look at this. We were in DKS, we made a few percent, and ultimately, if we stayed into it, we could have ultimately went 44%. You would have probably gotten out on that earnings, so maybe we would have gotten 40%. So I was right in the fact that this thing definitely went where I thought it was going to go, 40%, but it took 118 days. So that is something that we're going to have to understand, that either we really get quick about the trades that we do, but there could be a lot of noise, or you kind of just hang on to these things for a long time and in the pursuit of a 40% move. So it really kind of depends on what you guys are looking for. But say, DKS, if we look at look at this. The monthly and weekly, it went all the way down to its monthly 50 and weekly 200 and got outside of its third ATR on the weekly time frame. Like that worked out exactly as I thought it was. I just wasn't, I guess I wasn't willing to hang on to it for that long. So that's why when I then look at something like Boot, what do we think Boot's doing? Where do we think Boot ultimately will go? It will probably go to its weekly 200 and monthly 50. I bet it will, but it might take 100 more days. So, if you're willing to hang on to something like this for 44% and it's going to take 100 days, is that okay with you? And those are the kind of questions I think you need to ask yourself in this kind of market. So, all right. Well, I'm going to be wrapping up there. I know, sorry guys, I wasn't able to get all your questions. But I'm going to be, for those of you who are in Moxie or the options room, I'm going to be in the options room like next, I think. So we'll go wrap it up and I'll be there. I think I got half an hour until I'm in there, and then we'll see you there. So see you guys in a little bit.